And because of this function, I can now just read back, like where the video is playing and what he was talking about. That's why you really have to set aside 4 to 6 hours every single day trying to study. Even when you're just listening to his voice and not looking at the charts or anything, you can consume all these words that you will say to yourself when you're looking at the charts.
Am I in here to be part of a community where people look up to me and lead glad hand with me and say, wow, I want to be like you? Clout, image? Or are you here so that way you can afford a better living?
Okay, so that was ICT's X space, and this one lasts for like 4 hours, and I have just been playing it everywhere I go. I started out, just sitting here playing it, and then I felt hungry, wanted a snack, played it, and this is how I usually clock in like 4 to 5 hours of ICT stuff every single day when I was studying for it. So right now I'm kind of, getting back in track in regards to clocking in 4 to 5 hours of work every day. Now that I'm home and I have all of my nice equipment with me. So I wanted to keep playing the podcast or space while I go through all this stuff that I'm about to do for the week of 11/11 November. But I thought I should also record it because I should do more videos, and I promised myself that I would. So anyway, you guys, all of these videos are time sensitive, and what I usually teach or share are things that are going on. So if you really want to have the best benefit, you have to cross-check it with the market yourself after watching this. So most of the time I will try my best to post like once a week, and mainly in the beginning of the week, so that you can watch how it plays out as I am watching and also learning how it plays out. This is the chart that I'm looking at, which is your ES, NQ, and Dow Jones, and this is what I have seen for today. So this is the news calendar. We have bank holiday today on 11/11, and then Tuesday there's no news. Wednesday, Thursday, and Friday there's freight folder news. So Wednesday to Friday seem to be giving the action. With this one, I already know roughly when I would anticipate the biggest move. In this case, it's Thursday. And Wednesday, I want to see the setup form. And then this would be like the continuation of the move. So on the monthly time frame, Dow Jones is the only one that took out previous month's low before going higher. So right here, you can see this little wick before going higher, while it did not over here, and it did not over at ES. And ES looks more like an equal low, which it would then take out the next time. So this was done within the first full week of November, and we still have 3 full weeks left. So this is the monthly candle. As you can see, 1 week of November has passed only, and we already have this really big candle that makes up for the presidential election news, right? They need to show a bit of difference, So for weekly, here are the weekly levels I've marked out. ES has previous month's high and weekly fair value gap under price. So here is the first point I will look at as a support or a discount PD array. And then this is weekly bullish fair value gap. So this entire space is actually a fair value gap. But of course, we need to wait for this candle to close. Then we will see it clearly. But if price came all the way down here and move higher, this is a balanced price range. So I would still like to see price being attracted down into the weekly FEG. And then for NQ, we have the 6-month high. So it has finally taken out the high and previous month's high, which is over here. And then last but not least, we have Dow Jones with previous month's high and a weekly inverted fair value gap. So the same thing goes for Dow Jones. This whole price range is actually a fair value gap so far, and in between this is the other points I can find. So I am very optimistic that price would want to move a bit lower and give us some reaction on one of these two levels. And this is the weekly time frame. So as we go down to the smaller time frame, then we will add a bit more So on the daily, I see divergence above price right now. The levels marked out are in line with the 20 days look back quarters. Okay, so here there's a divergence. We have high, higher high, lower high, high, higher high, higher high, as well as high, higher high, lower high. So that is divergence between the three. And then the levels I was talking about, you can see these lines that marks out the last 20 days range. Here's the equilibrium in the middle, and here are all the quarters. So I'm just seeing how 6 months high is aligned with this, previous month's high is aligned with this one, and then this previous month's high is aligned with this, and then for Dow Jones as well, previous month's high. Oh, it's nearer to the one above, but the one below is the new week opening gap. So for Dow Jones, there's way more variance, or like a larger range when it comes to matching the levels. Okay, so first sign will be taking out the previous day's low. Only NQ has taken out the previous day high / previous week's high so far, giving divergence. So like I mentioned above, this is how the divergence look again. And then I marked out the previous day's low, which is last Friday's low, as the first point of break of structure when it comes to the daily time frame. Okay, here we see ES and Dow Jones gave the last spike higher during Friday New York PM session, which is after 1 p.m., while NQ was lagged and happened on Sunday night, which is Monday here in Asia. So yeah, this is what I have written out so far. And when the market opens later in about 4 hours, so one more H4 candle would play out, and then I would come back to the market to look at what's happening H1 and below. Okay, so today I was also revisiting the ICT Mentorship Month 8, Episode 4. I thought I would just show you guys how I do my journal when I'm studying his stuff. The previous time when I did this, I was actually using my iPad with the PDF notes of everything that he's shown on the screen. So I was just drawing on my iPad, and this is why I even got an iPad, is so that I could study his stuff while drawing on the charts. If not, it's so difficult to pinpoint out, oh, this point or that point when you're reading back and you haven't seen, the whole process of how he talks about the chart, what to look at with his cursor, and all that. So this time around, I'm just putting down, some of the stuff I'm reminded of. So since I've already done that, now this is easier. This Notion is just a little journal of how I study and how I type, what I look out for, and what I learned today. So this episode, we actually went through the central bank's dealer range. So the central bank dealers range is from 2 p.m. to 8 p.m. So we mark out the standard deviation, and then you see how price just push away from it, and the exit point is roughly 11:30 at London closing. So today is 11:11, and this first point was actually made on the video at 11:11. So I'm picking out signs. I'm looking at everything as a pattern. And then how we take profit with the CBDR is by putting out the standard deviation of where it reversed from in line with the time you want to close out by. So this is a 1:2. Overall, it's a 2 standard deviation of this entire standard deviation. Right? So these are all just more examples of how he does it. And another tip for studying is I like to go into YouTube and open up the transcript. So on the side, you get the timestamp as well as what he said. Sometimes it's very difficult to, type everything that he's saying. And because of this function, I can now just read back, like where the video is playing and what he was talking about just a bit before. And it might not be accurate, so sometimes you just have to make up some of the words because of his pronunciation. The automatic, AI generated thingy uses some other words which make it sound funny, but it also keeps your attention. You're like, Haha. For the next trade, standard deviation down is a PD array. So one more thing to take note of is whenever you're looking at the standard deviations, you have to match it with something else. So here we have the order block over there, and then this reaching up higher. If you look left, it's actually a fair value gap. And then over here, it's a breaker or order block. No, it's an order block. Yeah. Okay, so for take profit as well, when you're casting out the standard deviation, make sure that it's in alignment with a PD array like a fair value gap, order block, etc. Okay, so this is not a trade to take every single day. So the thing is, we tend to just go into the charts and try to figure out if this one works, and then we want it to work like 100% of the time, right? So here's a reminder that this is not a setup for you to find a trade every single day. It just so happened that, you know, this one has 3 out of the entire week he decided to teach. So it's always good to have this kind of reminders or like tools in the back of your head, so that one day when inspiration hits and this idea came to you in the form of, you know, like you receiving an impulse to want to use this method, you already have it in the back of your head. And I think that's what makes up a lot of my trades. So it's very difficult for me to say that this is how I trade all year round, because there are times when the market is acting another way and my first inspiration is to take trades based on the tools I already have in my mind. Yeah, so that's what I'm trying to say. So when ICT teaches a lot of different methods, it's really good to learn them all. As difficult as it is, that's why you really have to set aside 4 to 6 hours every single day trying to study. And it doesn't have to be like this every single day. You can just play a podcast or like his X spaces and, you know, continue doing your laundry or whatever, because he's always talking about the market. So even when you're just listening to his voice and not looking at the charts or anything, you can consume all these words that you will say to yourself when you're looking at the charts. All right. So now that I have done the ES and NQ and market is not yet open, I have a little bit more time. I am going to do euro and pound. So I was just reading a bit about ICT's Twitter talking about Donald Trump's winning the presidential election and how it's going to be looking a bit better for the Forex market in 2025. So right now I'm going to go look at euro and pound just to see if I can find something. I only do this when I have extra time. If not, I would just focus all of my energy on ES and NQ. So this is how I set up my journal. I go to the calendar, I put in what I'm studying, so that when I go back to the calendar, you can see on 11 November, I did this too. And then this is how it looks before. And then up here. So this is also how I can see whether I've been consistent with my journaling. This was September, right? I didn't show up this entire week, and I got a little back into it. And here, I showed up majority of the time, but that does not mean that I took trades in all of them. These are all just journals of me and what I see in the market. Oh, in August, I was pretty consistent. In July, even more consistent. So it's about time to get back in that habit of just journaling. You can't measure your success only from money. You have to also measure your success based on how much you show up consistently. That will make your journey so much more fun too. So open up, make sure it's full width so that all of the charts that you paste on this screen will come out big, even though when you're writing them, it can be a bit smaller. So now I want my charts to be a bit bigger. And this is the smallest. that notion would go. Why do this? Okay, let's go into EU, GU, and US dollar. We'll always start on the monthly time frame. Header, do this slash and then H, you will get header and monthly. Alright. I just want to see the last swing high and swing low, because all of this takes months to reach, right? I don't need to look too far behind. Yeah, this is good. So the closest one is 2023's swing high and swing low for US. So since USD is the ladder of this equation of all the currencies, it's a opposite effect of how it looks on their charts. I sometimes don't know how basic I should get, but I'll try my best. If a thought comes out, I'm just gonna speak my mind and see how many people it serves. Okay, so the next area that it would reach for. So the first one on the left is pound, and then euro, and then USD. So initially my USD was on the left side, and then euro in the middle, and pound on the other side. But sometimes I just want to look at two assets, and I don't know how to toggle them, so I did this instead of just when you switch to two, the XY is the one that disappears. So if anyone knows, maybe you could help me out. I could learn a new shortcut on my fingers. Alright, so for pound, the next swing low is right here, and that is, yeah, I was using this setting because I was on my iPad, so now I can finally see. Okay, this is April, the last swing low that was created was on April 2024. So I just marked out. So April is roughly 6 months ago, so this is the 6 months low. Okay, and the last swing high is this one. Wow, it happened on May. So that's divergence right there. Okay, so this is basically all I need to see on the monthly time frame. Just the nearest swing high and swing low. I'm not gonna put too much things inside the monthly, because when you go down, it will just not look as good. But good to know. Right, so what I did here was this camera button, copy image, and then I Control V in my keyboard. So let's see monthly. Okay, so this is divergence. We see higher high, lower high, and then higher low. So euro and USD are still, alike, identical, inversely identical, while GU has recently taken out its high. So until this is taken out, right, until this pink line is reached into, I will be looking for lower prices. So now going into weekly. Okay, so this is a lot of talking to myself, and I think the video will be like 2 hours long if I do this live. So what I'm gonna do is just look through it myself, have my perspective, and then run with you guys through it on this page when I'm done. So this is what I have done. For weekly, I've marked out the discount PD array because we're looking for lower prices, right? So the discount PD array for GU is this weekly fair value gap. And then we have swing low for EU and the 6 months low. as well as swing high and 6 months high for DXY. And then going into daily time frame, I've turned on the 20 days look back indicator, and this is how it looks, the last 20 days. And this is the last 60 days range for each of them. So in this chart, I'm still seeing that price might want to hit lower. So this weekly fair value gap, right, is in line with the low that has been recently created in the last 20 days. And if you look back 60 days, this is also where it was last at. So it's like a equal low in line with fair value gap. Okay, so now I spotted a divergence in the recent swing low. So with this marking on the daily time frame, it's telling me that it would want to go a bit higher before then going lower. So this is also a good opportunity to, if you're doing intraday, to look for longs into higher prices and then a short of a swing trade. So swing into the weekly target, but you look for the entry points within the smaller time frame. So this would be like my one shot, one kill is this take profit up here. And then any positions that I'm buying into would be an intraday one. So in H4, I've removed the DXY and just have pound and euro over here. So from this image, GU would have been the better buy entry because it fell short, while euro has already taken out, you know, the liquidity. It's like pushing lower, and GU is more of a consolidation, so it might give us more up move than euro USD. However, right above GU right now is this huge new week opening gap. We have here overlap with this one and overlap with the most current one. And when the new week opening gap is so big, price is just going to chop around like this. Yeah, you see, like no real movement. It just keeps stacking on that this is the area that it doesn't want to leave. So when price is within the new week opening gap, it's not fun. So I will not be looking for any fun within this entire range. And so we will wait for more data. Yeah. So overall, I still think that I'm not gonna add Forex back into my platter until it shows me a bit more clean price action. So I don't have any FOMO if I'm not taking any of this trade. You know, I'm open. I'm just here to learn and see that it can potentially go back on my buffet next year. But right now it's just consolidating and we're going into the holiday seasons. So maybe it's not the best time to be adding any new markets. Yeah. And I hope you guys learned something from this video and take something away for your own charts. I'll probably do an update in regards to trading next week, but in between I will still put out some spiritual, motivational stuff, daily habit stuff for you guys to enjoy. So make sure to subscribe and I'll see you guys in the next video. Bye!